one word to describe how you feel about the market. Again, it's how you feel. So I want to see feeling words if you can hear me. Excited, great. You guys are very well trained, huh? Okay, excellent. Every time is a positive, right? Well, the market is like if you read the particular book called The Intelligent Investor, Warren Buffett mentioned that his favorite chapter is called Mr. Market. In case you all didn't know about this, how many have heard of Mr. Market before? If you've heard of Mr. Market before, type me, okay? This is a very important chapter. Okay. Okay, for those who have not, I guess maybe you are quite new to the stock market yet, but the whole idea is this. Let me just explain to you. So, in that Intelligent Investor, this is one of the books that is highly recommended to read, not easy to read, but basically there's this it's written by the teacher of Warren Buffett called Benjamin Graham. He mentioned in his book, The Intelligent Investor, that we should ignore Mr. Market entirely. So what he mentions is that Mr. Market is he called it a psychotic, okay? He's a maniac, a psychotic. So every day he will come and then he will offer you business opportunities. Okay, for those who just joined, don't worry, we just got started. We're talking about the concept of Mr. Market, taught by Benjamin Graham. And this whole idea is every day the market, right, is a psychotic, and you don't take advice from psychotics, right? But the psychotic, right, they have a lot of businesses to sell you, they have stocks to sell you. So when do you buy from a psychotic and when do you sell from a psychotic? You do not take advice from a psychotic. Understand? So there's a whole key thing. Do not listen to them. Do not take the advice from them. So when I say do not take advice, do not listen to them, right, is this. When the market goes down, right, okay, it's trying to say that right now the businesses are not in good condition. You should actually sell. You shouldn't buy. But in fact, when the market goes down, it is the time that we should be greedy. Okay. So now, again, this is the S&P 500. For those who are just here, for those who just join me, can you all share with me, how would you describe the condition of the market right now? And how do you feel? Do you know what you should do? Okay, so today I'm going to go through a few key things. And the important thing is this, because, market, right, seldom gives us very, very excellent opportunities. I mean, they give us opportunity every time, but you talk about mega sale, you talk about Great Singapore Sale, okay, not always all the time. So look at this. Is the market up or down? What do you think? I mean, based on facts, is it up or down? It's down. Okay, thank you very much. Actually, you all forget to ask me, depending on what time frame, right? So in fact, if you look at 1 day time frame, I think it's okay, it's still down. Okay. In fact, I thought it went up. Okay. Did I got it wrong? It went down? Okay, yeah, it went down. Okay, so my mistake. But you look at 1 year time frame, it's up. You look at 5 year time frame, it's up. You look at maximum time frame, is also up. When you look at the big picture, right, does it become clearer on what you should do? Just now goes down, looks very confusing, right? But can you tell me what you should do? Talking about, let's say, investing, how to make money. You all know or not? Actually, if you all know, then the seminar ends already. The webinar ends already. What should you do? You see, the market goes up in the long run, then they'll give you pockets of downtime, downtime, downtime. Of course, it may be here. It may be a repeat of here. It goes up, then go down some more. Okay, but you pull it to a 1 year, 5 years. Is it obvious what you should do right now? Okay. So, well, buy SPY, buy S&P 500. This is the recommendation by Warren Buffett himself. So it's something that I thought is very sound. And let me share with you why. Because in the end, right, I want to explain a few things. Shall we go back to fundamentals? Buy call. Okay, wait. Buy call, you must also look at a few more things. Okay. But the key idea is we can leverage on certain, like I'll say, buy and hold strategy. Yeah, buy call is very expensive. So we're going to take a look at that. Okay. So now let me just wait, admit the rest of you guys. Maybe I put on a different face. Okay, I got a different face to show you guys. Maybe if I talk like this, it will be a lot more credible. Hey guys, today it's time to buy Tesla again because Tesla stocks are amazing. Okay. So anyway, let me go back here. I want to ask you guys a few questions. Okay. The first question is this. Okay. Of course, in the end, these are facts. When we have data, we must ask ourselves what is the implication and what is also the implementation. What do we do with it, right? My own face better. This face feel like slapping him, right? Okay. Maybe a dog face or baby face. Baby face. Okay, so anyway, so the question is, what shall we do? Okay, what shall we do? I'm a baby in the market. Okay, so the thing is this, I want to go back to a particular fundamentals and I want to test you guys. This is really just, this one is a very important question, but I want to ask you guys and instinctively, what should you do? Now, I'm going to give you a scenario, okay? I want you to imagine that there are two persons, two friends, and these two friends, A and B, A called Andy, okay? B is called Betty. Now, so both of them, they are betting with each other. So the thing is this, there are two dice. Two dice means there is 6 sides lah. Okay, each dice got 1, 2, 3, 4, 5, 6. So I want to share with you, they are going to roll the 2 dice. We're going to roll both dice together. And then if, okay, you all tell me which one will be a better scenario. If the dice, the biggest number of both dice, so the number, 2 dice, right? The bigger numbers, right? If the bigger number is 1, 2, 3, 4, ND wins. If it's 5 and 6, Betty wins. Now, instinctively, right, who will you want to bet alongside with? So let's say you can bet who win. Who will you bet? If it's A, type ND. If it's B, Betty type B. A or B? What do you think? Just instinctively, A, B, A, B. Okay. Oh, interesting. A, B, A, B. Okay, how come different answers? Very interesting. We share the same scenario, we share the same data, but there may be different answers. Okay, quite a number of A. Most of you all say A, some of you all say B. Now, for those who didn't get the correct answer, don't be too worried, because I'm asking you guys to instinctively share with me. So I want to share with you, right? If let's say you know mathematics, or you are quite good in, I would say, all this math, right? I think you have a good chance. Because in the end, right, let's see who has a better chance. I want to explain this, then I want to explain to you the stock market. Now, you must understand, right? Okay, let me go through this. Why am I going through this? Is because I want all of you here to become super investors. I don't want you to just be taking bets that is may not be in your favor, okay? So let me explain to you. You know that there is a few possibilities of the dice roll. So let's say 2 dice. The first dice is represented here, 1. Okay, you can roll 1, you can roll 2, 3, 4, 5, and 6. Okay, can? Then the second dice, also same thing. Can roll 1, 2, 3, 4, 5, and 6. Got it? So now you must understand, if let's say it rolls 5 or 6 here, then the ND will win. Correct? No, sorry, Betty will win. Make sense? Understand so far? So all this portion, Betty will win. So, okay, Betty will win. Wait, let me just click here. Okay. So here, Betty will also win. Alright, right. Betty will also win. Okay, so the rest, ND will win. Okay, 2 dice. So you roll 2 dice. If it's 1, 2, 3, 4, ND wins. If it's 5 or 6, meaning you say the bigger number is 5 or 6, right? Betty wins. So in the end, right, you must understand something. This is the all possible outcome. Altogether, can I ask you guys a very simple math? How many possible outcomes are there? How many possible outcomes? Anybody? Yes, 36. Okay, I'm asking you guys this, right? And if you don't like mathematics, if this is like very stretching your brain, right? Congratulations. Because I can tell you, investing, right, is a lot about mathematics and probability. And don't worry, you don't need to do a lot of calculation now. You just need to understand statistics, and then that's where you know where to place your bet. So you can see, right, in the end, there's 36 outcome. So this guy, ND, right? Okay, 1, 2, 3, 4, 5, 6. Okay, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So there's a 16 out of 36 chance you'll win. 16 out of 36. This is ND can win. So the other person, how many chance? Yes, correct. Betty will have 20. You know why 20, right? Okay, because 36 minus 16, so it's 20. 20 out of 36. Got it? So in the end, who has a higher chance of winning? It is Betty, because Betty got, I think, 55% chance of winning. ND got 44% chance of winning. If you take, which is just now we saw 16 out of 36. So I want to ask you this, versus 20 out of 36. So in the end, right, who should you bet on? If let's say both of them, the payout ratio is the same and you can multiple bets. So who should you actually bet on, A or B? Okay, who will you place on? Okay, if I say roll a dice like that, we should go for B, right? Why? Because higher chance of winning. Now, but not only 5% chance, only 11% chance of winning. I can share with you, if in investing, this is how we do. We go for the edge. We go for an advantage. And if let's say there's a higher probability of winning, that's where we will enter there with position sizing. So I always mention 2 things. As super investors, we must always have 2 things. Number 1, we must have an edge. Meaning you say advantage. If we don't have an advantage, meaning you say, what's advantage? More than 50%, we don't play. So if let's say there's not a higher chance for us to win, we don't play. Number 2, when we play, do we go all out? Answer is no. We have table limits. Or what do we call? We call PS. What's PS? I need to drill to everybody. What's PS? Please type. How many type? PS is Plaza Singapura. No lah. Okay. PS is position sizing, correct? Position sizing. Again, like I mentioned to you guys, I'll be going through very in-depth detail on what position sizing is. But for now, a simplistic way of saying is every time you bet, I want you to just bet 5%. Okay, every time you invest, just allocate 5% of your portfolio. If you lose, maximum you lose 5%. If you win, it can be 5 times, 10 times returns. Got it? Table limits cannot use martingale strategy. Actually can. Okay. I mean, okay. So for casino, they don't want you to use martingale strategy against them. But can you use martingale strategy? Go and think about it. You can use in certain scenario. So, but you must use martingale strategy to for those who don't understand martingale, right? Maybe the next time I go through again, but you must be able to survive 8 strings of losses, 8 to 10 strings of losses. You must start small, keep doubling. Okay, so it's actually possible, but you must also work for worst case scenario. Got it? So now let me go back to here. So what's our action? Okay, actually, 3 things I want to share with you guys today. But the whole key thing is this: I want to bring you guys back to confidence in the market. In the long run, does the market usually always go up? Answer is yes, but exactly by how much, right? Let me show you some statistics. So this one, you can see, maybe this one, okay, visual, but basically, if you hold very long term, you should not lose money. And also, there's multiple studies that show that. But this one, I think a better statistics side. Okay, done. Okay, so basically, right, when they study from 1996 all the way to 2020, right, we talk about the number of ups and downs days. So there are some days market goes up, some days market goes down. But you can see 50% of the time, more than 50%, the market goes up. So therefore, I do not do a lot of shorting. Shorting means short the market out, guess the market goes down. I don't really like to do that because the odds are against me. Of course, this is based on pure randomness. If I don't have any indicators, for some of you guys, you use indicators, right? How many of you use technical indicators? If you do, can you all please share some of the indicators that you use? There's nothing right or wrong. I'm not here to judge you because whatever works. Okay. Okay, martingale strategy. Thanks a lot, Casper, for sharing. Yes, you must survive strings of losses. Then you can double 8 times and you still got enough money to play. But I can tell you by the 8th time, will be quite scary already. I can tell you why. Because I tried before. Any one of you actually tried martingale strategy? Okay, stochastic RSI MACD. Martingale means, right, basically, if let's say you bet, okay, market goes up, market goes down. If let's say goes up, you win. Okay, maybe I just share in a way like, maybe you bet with your friend, coin flip, heads or tails. You say, okay, heads, I will win, tails, I lose. So let's say tails, then you lose. And every time you bet, let's say you can bet however much you want. So if I bet $1, if I win, I take $1. If I lose, I lose $1. So I just try to explain martingale strategy as much as possible because I think it's a very, okay, martingale strategy. It's a martingale system. Today's show, what's this? Okay, so this is the best idea. So okay, meaning to say, if let's say the first time you lose, second time what do you do? If you lose, if you lose $1, you second time you bet $2. You bet $2. Why you bet $2? If you bet $2 and you win back $4. Okay, you win back $4, but you get back $4, but you invested $1, you lost already, plus $2. So $4 minus the 3 coins that you put in, you win back $1. So you still win. If you lose the first time, you lose $1 already. Second time, you bet $2. Third time, and then you still lose. Third time, you must double and bet $4. Why? Why you bet $4? Because if you win, you get back 8 coins. But 8 coins minus away your own 1, 2, 3, 4, 5, 6, 7, you still make $1. Understand? So you must keep doubling. But by the time you double about 8 times, I can tell you your nose will bleed. If let's say you are playing stocks or things like that. Okay, got it? So this is not saying not doable. But I do know a friend who is very, very good in this, and he has been doing it very well in the Forex market. Because Forex, you can go for $1, $2, $4, $8, and by the time you hit $32 or $1,000, still can take it. Okay, but stock market don't have $1, $2 stocks. I mean, very few, okay, and they don't go by like double and stuff like that. It's a very interesting strategy, and this one is something that it has been proven to work as long as you can take it, and it's based on fair chance. Okay, fair chance. Okay, green tea. You also tried before. I also tried before. I can tell you, sweat. It's very, very scary. It's very, very scary. Okay, for those who use technical indicators, I love it. Okay, total indicator system, 20 days breakout system. Is it? Irina? 20 days breakout, right? For total system. I tried most of the system. If you all love trying system, right? There's this crazy book called by Cathy Lian called Trading Systems. Let me see. Cathy Lian. books. Okay, she compiled all the crazy systems. You can go and go through. What is that? I cannot remember which one. But there's one that's a lot of she compiled I think 1,000 systems, and I tried most of them using my algorithmic kinds of coding lah. Okay, so now let me come back to here. So remember, the whole key thing I want to show you is stock market. It is a little bit better, higher chance if you bet the upside, bull run. Why? Because inflation, things generally goes more expensive. So I like to see it this way. I like to actually remind all of you guys. Again, going to S&P 500. Okay, where is it? S&P 500. In the long run, can you see that it's like a gravitational pull upwards? It's like as if there's a gravity pulling up. Can everybody type up? Up. Okay. So if let's say you want to fight against gravity, once in a while can something fly up. Okay, a rocket can fly up. Everything can. You can use energy to push it up. But I think naturally it will come down for gravity. Stock market is the other way around. You need certain events to trigger for it to go down. But if all else equals, on peaceful days, don't have wartime, don't have crazy things that happen, generally it's going up. Why? Because of economic progress. Let me explain to you this scenario, and then you all see whether it makes sense. Do you all agree, right, that every single day, you and we wake up to make our lives better? Most of us, millions and billions of people wake up to make our lives better. Agree? If agree, how many type A? Think about it, okay? Okay, this is a very important very important question. Why am I asking you? Why am I saying all this? It's not philosophical. So you see, if every single day, everyone is trying to make our life better, everybody is thinking how to make more money, how to progress the businesses, except for some small groups of people who are crazy, like terrorists and things like that. But if you want to make your life better, right? So generally, if you look back at 10 years, 20 years, 50 years ago, or even 100 years ago, you look at thousands years ago, right? Our life right now there's an aircon blowing me. Last time, even the most richest king on earth, they are not able to actually what do you call that? Enjoy this kind of facility. So some of us, we are living even better than kings right now. Now, of course, when we compare to our neighbor who got better aircon, better car, better house, we feel a bit sucks. But generally, life becomes better over time. Financially, okay? Financially. You talk about mental health, you talk about relationship. I'm not talking about that. I'm talking about financially. Life becomes better over time. The world becomes richer financially. Okay, if you agree, I'm type F. Got it, huh? So let me ask you, you think so we got iPhone 1, iPhone 2, iPhone X. I don't know what's the latest iPhone? I don't know. Latest iPhone. But you see, my iPhone now is also a smartphone, right? Can you imagine 5 years later it become we go back, we become a big chunky phone, then we begin to not use iPhone, not use phone. Cannot be what? Things will always progress. So if things progress, the whole entire market will swing up due to inflation, due to progress, due to better GDP. Even GDP per head, I think I was very reading Shamugan talking about like last time when British colony let us go at time, our GDP was a few $100s per head. Now it's 80 over 1,000. You don't come and kacau us, don't come and say how bad we are. Okay, so every country progresses, right? So therefore, the market, there's a natural swing up. There's a natural force upwards to push the market up. So naturally, don't try to short the market. So how then do we profit from the market? If the market is going up, how then do we maximize the profit? Actually, one way, right, is just to buy and hold. But the better way is to, during pockets of dips, that's where you buy, right? Even better, Then now there's one dip for you, Okay, so end of the seminar. Because in fact, what I want to say is there's opportunity. But Sean, will it go down even further? What if it goes down further? So let me explain to you all something, guys. You all see whether it makes sense. Now, I want to share with you. I think I shared with you all this scenario before. When was it? Okay. I mean, I bought a few cars in my lifetime now. So I bought cars. You know, each time we buy car, right? Singapore, the COE is like stock market. Do you all agree? For those who don't know what COE, Singapore, we have this particular certificate you need to buy before you can own the car. Okay. How many of you feel that our COE is also like stock market? If you agree, how many type yes, lah? So I can share with you, right? Sometimes you also don't know if you buy the car now, next few days will it go up or go down. It's crazy one, The COE sometimes, the COE won't have discount. The COE is the cooling measure for car. You know what I'm saying? So let me share with you. There was one time I bought this Honda Odyssey. Honda Odyssey. The time my kids were very small. So, okay, was it Odyssey? Cannot remember the car I buy. Okay, I'm not really a car lover per se, but I was buying this car. And that time, right, we were waiting for the COE to drop. Then it dropped, right? Okay, it dropped, and the car was about $130,000. Okay, now if I say $130,000 is considered cheap, can you syndicator for COE? That time I got a friend who used system thinking to go and predict COE prices, and he was actually correct. Not technical indicators. Okay, but I want to explain to you guys this. Now, so we were looking at the car. So I told my wife, very hard to speculate COE. I tell you what, our budget we put 130,000. If hit 130,000, we buy. So really, the agent calls and say, hey, hit 130,000, you want to buy or not? So after that, we very excited, we go. Then we say, hey, last week it's 150, then 140, then 130. So question is, should we wait or should we buy? Okay, should we wait or should we buy? What do you think? If our budget is 130, we want to buy the car because our children all very small, we want a bigger car. Should we buy or should we wait? So after that, we buy. After I buy, right? Then after that, right? I buy already, I don't care. But my wife, next week, right? 1 week later, she checked the COE. Then she tell me, hey, you guess the price went up or went down? She asked me, you guess the price went up or went down? Then I look at her, I say, hey, don't tell me. You know what I don't know? You know what I don't know? Because you see, it's very funny. Okay. So I said, hey, don't tell me. Then but in the end, she tell me, she said, "Ayah, went down. From 130 now, we can actually could have bought at 120. How do you think I felt? How do you think I felt? How will you feel now if you buy your car 130, then suddenly become 120? Can buy $10,000 cheaper. I feel lousy, right? I look at the car also like, stupid car. But let me ask you this, when the price went down to 10,000, did my car become smaller? Did the function of the car change? Did my kids feel like this car lousy? Nobody cares. The only person who cares is the person who go and check the price and make yourself feel lousy. That's it. Do you seem okay? I don't know how to pronounce that. Okay, so you understand, right? So I want to share with you, right? The function of the S&P 500, right, is to what? Is to buy 500 of the best businesses. And the funny thing is this, actually, after you buy, if it goes down, don't be too sad about it, okay? Don't be too sad about it. Okay, if let's say it's your budget, go and buy, and then you know that, okay, of course we don't know, we don't know whether next day will go down or not. Although you can use technical indicators, and it looks like it is a rebound in my opinion, okay? But it may go down further, but in the long run, it will definitely go up. If you go and be very upset over these small little portions, right? Wow, I tell you, investing very difficult. Okay, so again, let me summarize this for you guys. You must understand this. This is over a 94 years period. 94 years period. Of the 94 years period, okay, if there are 73%, okay, 73% of them are positive. Positive means you say there's a 73% chance, right? Within a year, your stock should go up one. Okay, 73% chance. So if you buy it, your chance already higher already. If you hold it for 3 years, there's an 84%. You hold it for 5 years, there's an 88%. If you say, okay, I buy this for my children or for whoever, right? There's a 94% chance of you by the end of the 10-year period. Okay, within the 10-year period, right? Okay, there's only 6 periods. Periods meaning you say within basically that whole entire 10-year cycle, right? Out of 90 over years, right? There will be a certain negative, but even the negative also very little. Okay, so how do you get negative in a 10-year period? You must buy at super high. Then by the time certain big crash, it went back to the 10-year low. Okay, which is very, very rare. It's very, very rare. Okay, so you must understand the chance of you making money from the stock market is high or low. Tell me this. If you buy S&P, the chance of you making money is H, high, or L, low. It's actually high lah. So the thing is this, I want to go back to the psychology of it, but this 1 year is 365 days. 1 day, there's 24 hours. So some people who go and stare at the stock market, right, it will always look like it's going up, it's going down, and it's very, very scary, okay? So therefore, I want to go back to the fundamentals. If you buy and hold in the stock market, certain portions, if you're unsure, I shouldn't give you any trading advice. But if you're unsure, but you just want certain of your portfolio to steadily grow, put maybe 5%, buy S&P, sleep, don't do anything. Got it? So, okay, look, yeah. So for the very, very, I would say, passive investor, you can just do a dollar cost averaging for SPY. I'm not too sure which one have because I myself never do dollar cost averaging. Okay, but if you don't do dollar cost averaging, actually I share with you a smarter way. Okay, because I think because I always mix with investors, then we always talk about how to best leverage on ideas, right? Instead of dollar cost averaging, right, just wait for one big drop, then throw everything inside. Does it make sense or not? So there's up months and down months, You think about it, There's up months and down months. And basically, instead of doing a dollar cost for 10 years, okay, instead of doing that for 10 years, you know there are some years is losing money. Then the years that's losing money, there's the time you go and buy. So you accumulate, or losing money, pump, throw inside. And then throw inside already, may not be at the top, but it's the downtrend you buy, boom, should be higher chance of making money. Okay, this is one possibility. Otherwise, I think, hey guys, anybody knows any other brokerage can do dollar cost averaging? VOO also can. SPY, VOO also can. Okay. So if you all know of any brokerage that can do dollar cost averaging, right, go ahead and do it. Okay, it's one of the IBKR, is it? Okay, let me go and find out. And Dowers definitely can. Okay. DCA for SPY. This one is a very safe one. Just buy, it should be okay one. Okay. So this is the idea. So I do hope that you guys continue to think like, hey, if I buy this particular thing, what is my advantage? SPY, definitely all the data point is telling you, yes, you will win. Okay. You hold it, you buy it, you will win. So if let's say you know you'll win, then why don't just highly leverage? I mean, not necessarily highly leverage, highly focus on this. Okay. So SPY, I think I was showing you guys the Fibonacci portion. Again, let me demonstrate how to do it. So I find this very useful, and somehow it seems to be pretty accurate. I think a few days ago I told you guys, hey, this one hitting and breaking already, but it may bounce back up. So let's see whether it bounce all the way back up. So Fibonacci, for some information purposes, this is a free what do you call it? A free website called TradingView. For those, it should be quite familiar by now. If not, go to TradingView, play around with it. So the technical indicators, Fibonacci retracement. The top point, pull all the way to the bottom point. So, okay, when I've time, then I tell you more, guys, about Fibonacci. This is one of the mathematical wonders of the world. Okay, so Fibonacci, really, there are a lot of mathematical redynamic, or I would say probability and things like that, which is very important to investors. Really, we must actually learn. So you can see it bounces along all these lines, which acts as support and resistance. Bounce. Oh, okay, this one is more like self-fulfilling because I already pulled from the top to the bottom, but you can see it bounces around here. Not perfect, it's never perfect. Okay, now there's a certain chance of it going all the way up to 5,002 or 4,008. So if it's already here, right, actually, if let's say you want to play a little bit shorter term, if you want to, and if let's say it's in your game plan, what you can do is you can even enter here and then set a stop loss over here. Then, so your risk is here, your reward is here and all the way up. If it continue goes up, just let it run. Okay. So I mean, if you not even say short term, but let's say, okay, I want to buy now, but if it goes down, it may break down, right? Then you just exit the market, wait for it to drop further, then you buy. Okay, it may drop up down here and then go all the way up. Okay, so this is my game plan for S&P 500. For super investors, tomorrow I will literally just enter some into the SPY. Okay, Ken? So I do hope that this is useful to you. This is my opinion. You all must do your own homework. Okay, and make sure each time how many percent of your portfolio. Short term is how long? Okay, when I say short term, right, means that you're not intending to hold for, let's say, 2 years, 3 years, 4 years. If you're using stocks, right, you can actually literally hold forever. So when I say short term and you don't want to see the fluctuation, right, it may be swing trades. Swing trades, right, can be up to less than 3 months or a few weeks, typically a few weeks. So this is those who like to actually, for those who like to use martingale, okay, if I lose money, I drop. When you go down here, I double the money. It's possible, but you must make sure that maybe S&P, I think $400 over, you can buy one stock. Okay, SPLG, YG, quite a number of like representation of SPY, or even the subsets of it are pretty good. Okay, so this is SPY. Now, few more things. As I explain more, I hope that it becomes more and more, I would say, intuitive to all of you guys as we move this journey along. So I go to SPY. I also like to look at this thing called bar chart. Now, this is critical if you want to use options. So because SPY, I personally think that there's a chance it may continue to go up. Okay, if you want, you can look for confirmation, but you can see based on the past patterns, right, they don't really give you a chance for confirmation one. Okay, so let me share with you. If you want to use options, the critical thing to look at is this thing called IV percentile. Now, can you share with me right now, IV percentile is 72%. So let me ask you in this way, ask you a few questions, you answer me. Is the options, if you want to buy the options, is it expensive or cheap? X or C? 72 is expensive. So if it's expensive, what should we do? What should we do? I want to hear what you're gonna say. You can sell call. Wow, sell call. Okay. Sell call, can sell put. Okay, but make sure the money. There's also another possible way, guys. It is called dynamic hedging. Okay, Dynamic hedging, for those who I'll not go through this into there's quite a lot of things I want to share, but you hope I don't mind. I just you don't mind, right? I just share all these ideas, then you all can go and do your homework. But along the way, there's really a lot of possibilities in the stock market. Okay, dynamic hedging, right? It is, let me see whether there's a visual for it. Okay, dynamic hedging is to make use of, well, they never really share. Okay, is to make use of basically, let me explain to you. Because right now you think that, okay, the stock may go up, but the options is expensive. If options is expensive, we shouldn't buy. What should we do? We should sell. But if we sell a call, it's very stupid, right? Because sell a call, then that's where you will get that doesn't make sense, right? You sell a call. What do I mean? If you sell a call, then if the price goes up, then you actually will be in risk of losing money. So you must understand, right? The options itself, right? Okay, I don't have the options here. If it's too much, you'll just stop me. Okay, sometimes, well, because you'll make it like exciting, I will share a lot more. Okay, do they have this? Do they have the options Greeks? Okay, volatility Greeks. Okay, got it. Oh, okay. I'm a bit worried that it may confuse some of you all. Okay, so if you see, let's say if I sell a call, okay, if I sell this call, a 507 call, right? Now, if I sell a 507 call and the price now, this one is not SP, it's SPY. Okay, and the price now is 502. But I sell a 507 call. If I sell 507 call, there's a risk of the price going up and then I lose money. Because when I sell a call, I'm allowing people to buy my stocks, which I don't have stocks. So what do? By right, you are supposed to buy the stocks. Now, actually, you can don't buy the stocks. Because you say, I'm also not sure whether it go up. Or you can actually sell a put also. But let me explain. So if you sell a call, let's say this 507 call, this is theory, guys. Please don't do it. I'm just opening up our minds. And if it's too much for you, don't worry. I'm coming back to simpler things, okay? 507 call. Can you see the delta? Can you all please help me type D for delta? Can you help me type how much is it? Oh, it's actually very low. The delta is actually very low. The delta is extremely low. Okay. It's 0.3, right? But let me show you guys something. Let's say there's it's actually very low. 0.06. Oh, this one is a little bit weird. Okay, because it's so low, right? Maybe let me explain. If it's 0. Okay, what does delta mean? Okay, this one you can see 0.36, right? So 0.36, what it means is every time the stock price goes up by $1, by right, these options will go up by 0.36. So same thing. If let's say the stock price start to move, right, and the options increase in price, if let's say the stock increase by $1, you will lose 36 cents. You know why? Because you sell option and then when the price goes up, you must buy back. So every time stock increase by $1, your option will lose 36 cents. So far, can you understand? If you can understand, how many type? Okay lah. This one theory for fun just to open up your mind. I don't want you all to use this first but the more we learn, the more we actually can get I would say understanding of it So what it means is this you can actually buy 0.36, right? So what you can do is you can buy 36 shares Okay, instead of 100 shares, you buy 36 shares. Why? Because if the stock price goes up by $1, these 36 shares, will make you $36. It will go up by $36 but your option will lose $36. So it's a dynamic hedging, meaning you say even though it goes up, right, you also don't lose money. Then why do this for? You do this is because you make the premium. Does it make sense or not? So if it goes up, you don't lose money but you make the premium. So if really goes up, you make money because you already got the premium and the stocks cover your position. But if it goes down, then you make the premium, but your $36, your 36 stocks will go down. So far, can you understand? If you're interested in dynamic hedging, help me type DH. We can dive more into that. But I can tell you options is the world of options is so fun because there's so many things to actually maneuver, right? And it's very useful for those who want to master it. And because you master this, you have a lot of different moves, ultimate moves against the market. Then you can actually do a lot of things. Very fun, huh? Okay, this is not my syllabus today. Let me go back to the simpler things before I go crazy, go berserk. Then we will be here until 1 a.m. already. Okay, which I also don't want because I want to spend time with my kids. Okay, so a few things that I'm looking at. Okay, one thing is actually just now we were looking at it, right? I show you a screenshot of Meta. You all know Can y'all see this very beautiful thing that's going to happen to Meta? Can y'all see the pre-market price? Let me zoom in a bit more. Wow, this one I see already. My saliva drop like crazy. Okay, it's not just straight dip. It's not just straight dip. Can you see that the pre-market? So the price now is 493, but then when the market open, it's going to be 430. Wow. Okay, can you tell me what you want to do? What do you want to do with Meta? I mean, for me, I think it's excellent. And do you know why the price dropped or not? Okay, if you all go and read the Meta stock, this is crazy. So in fact, right, their revenue, their profit, everything increased, but the price dropped because they told the investors, I want to spend more money to invest in AI capabilities. I'm going to make your company stronger in AI. By the way, guys, have you all tried Meta's AI? So the capex is high, so the investors don't really like it. But in my opinion, do you like it or not? Do you rather Facebook as a shareholder? Do you want them to invest into AI or not? For me, this is my own opinion. I don't know whether you all try this out. Wait, let me just I share with you all a few things. I think that is very, very got high potential, in my opinion. In my opinion, there's high potential. And they say that the AI is for better advertising and all that, but it's not. In fact, right, they are using their version of Llama. I don't know whether you all heard of all this. If never heard before, also don't worry. But you do an assessment. And by the way, in the end, if you think that, wow, really, I also agree that the Meta is going to be very good. I don't know whether you all saw this or not. Hang on. Do you know your WhatsApp now got AI? This WhatsApp. This is the WhatsApp version. So I've been talking to the wait, let me see whether you all can see or not. How many of you tried already? If you all tried, then you all tell me, okay, hey, do go and try it out, okay? Because it's in my opinion, it's actually almost as good as ChatGPT. In fact, I tell you what, I don't know whether you all got so this is Meta AI, and what I do is every day I just say, hey, this is my schedule. Then after that, I will say, can you pull out my schedule? And they will pull it out for me, okay? The AI can give stock advice. It can. You try. Yeah, I'm not kidding you. And the stock advice is not bad one. I'm really shocked. I said, wow, the advice they give is really not bad. So they are becoming stronger and stronger. I'm not kidding you. You try. So let me just try. Okay. Can you share some undervalued good stocks? Okay. Okay, you must ask Okay, for education purposes. Okay. Only share some good Buffett stocks. Okay, undervalued stocks. Okay, so you go and try it out. It's actually not bad. Okay, but you can do it for, let's say, scheduling your call or like doing your things. Okay. Oh, interesting. Okay. So okay, I can see that they go give some like advice here and there. Okay, but I'm not going to go through into all these things. But I think for Facebook, right, it is a very good opportunity. That's my opinion. Okay, so it actually plunges. So what I want to do is this. Okay, but because right now, right, even for Meta, if you go and check, so let me share with you guys. Meta bar chart. Okay, Meta bar chart. If you go and take a look at it, the IV percentile is crazy. It's 99%. Wow. So it's ultimate. This one cannot enter with options first. So for Meta, what we can do is we can actually wait. For me, I'm going to wait because what we want is a confirmation. You also don't want to enter when it crazy gap all the way down. This is the part you cannot enter. So Meta, let's keep an eye on it, but we can wait. But if let's say you want to buy for long term, just buy as a stock, right? You can buy when it drops. Because based on the valuation, I think after it dropped, right, it should be a very good value already. Okay, so number one idea is Meta. Let me just type down all the ideas, and then later I give you guys a summary. So stocks to buy. Okay, number one. Ideas. I cannot ask you to buy. It's called Meta. Okay, this is my opinion. Okay, I also think SPY is something that right now can buy. I mean, I love all this opportunity. Now, how about for those who love options, those who prefer options? Type me. I'm going to give you some possible suggestions. Possible, okay. Now, the thing about options is this. Okay, so for options, right, we can buy them, but the IV percentile should be low. And let me share with you. Do you know that Meta, they say that they will spend don't know how many 2 billions onto AI? Can I ask you something? Which companies will benefit? Which are the benefits? Which are the companies that will benefit a lot when all these crazy companies are going to pour money into AI? NVIDIA. Yes, but NVIDIA also crazy overvalue. So what other companies can benefit? TSM. Okay. So actually, can you all see or not? And it's like almost confirmed guarantee, you know. So NVIDIA actually is another company that you can start to look at. But same thing, NVIDIA, actually I think a lot about it. Like, it has went down quite a bit, right? Valuation wise, I don't think we have enough time to wait for it to catch up. Catch up means, right, we need to the book value to show everything, but we already can forecast for the next 1 to 2 years. Very likely they're going to break earnings, break records, show better earnings. Does it make sense or not? So this one is based on I would say qualitative. It's based on the business sense kind of bet. So Nvidia is a possible idea to really go and buy right now. Okay, can but Nvidia, let's take a look at their bar chart again. So NVIDIA, I think you also can guess lah. NVIDIA, there is no way that their implied volatility can be low right now. Okay, very, very unlikely because they are the hot stocks and everybody is talking about them. Okay, so yes, below is better. So okay, later I show you all some cheap one. So can you see IV percentile of NVIDIA is 94. So what does it mean? It means that we can possibly look at buying the stocks. Now, but of course, some of you really don't like stocks. But the good thing about buying stocks is what? You don't need to monitor. There's no expiration date. If you go into options, we have to monitor. We can get involved or into situation where there's volatility crash. Okay, when it crash, right, we may get affected also. But NVIDIA is a possible idea. Later I'll screenshot and show you guys everything. Okay, can? Now, this one is what? This one is Meta. Meta cannot touch. NVIDIA cannot touch in terms of options. Let me show you guys some that can touch lah. Okay, can touch means quite interesting one. Actually, there's another guy, right? The AI is getting better and better also. Wait, TSM, I cannot remember. Let me check. I think I was checking TSM, but I cannot remember upfront whether the implied volatility is high or low. Cannot remember everything. Okay. Oh, also very high. So TSM, unfortunately, also cannot buy options. But what we can do is we can also collect the stocks. But later I share with you all these stocks collection things, right? In fact, right now, Meta just announced earnings, correct? Let's wait for a few days. Wait for a few days, wait for the price to drop. We see what happens to the volatility. When there's a volatility crash, there is a time we may go in to long the call. Okay? SE, well, I never take a look at SE yet. Is it good? SE as in Shopee. Maybe we see whether 5 they got 5 sales or not. Also 77%. Okay. But all these stocks, right? If you want to, but SE, is there anything spectacular that makes you want to buy? For me, I didn't see anything spectacular about SE right now. Yes, there's a lot of earnings period, right? C is very low. Okay, great. So actually, Citibank, I think you all saw that the price actually went up quite a bit. Okay. So now let me share with you, right, a few that I think you can take a look at one. Now, there's this guy called Baba. Now, I want to say upfront that Baba is something very controversial because it's a China stock. But the fundamentals are crazy. It is overvalued for very, very long already. And recently, they released quite a bit of AI tools that was pretty amazing. So they are going into the AI game. I think it may be worth to take a small bet into Baba using options. This is my opinion. Now, if you don't want, later I share with you an alternative. But you can see that Baba stocks, it is going up, it's going down, but it's not ranging. Can you see that? It's not really ranging, but crazy go up and down. Agree, right? So actually, for those who know some of the strategies that we use, okay, let me show something exciting about Baba first. Can you see for Baba, the implied volatility is 31 percentile. So if you are interested in long-term call, Baba's option is actually quite cheap. Okay, how many of you think that is quite a good idea? Now, so Baba, and then the stock price is $74. So if let's say you think that, hey, Baba can, you wait for the technicals to go a little bit more down, or if you want, you can just go in and then see what happens. Okay, so this one can be quite a long-term thing. And as I mentioned to you just a few months back, right, I saw a lot of gurus starting to buy Baba. How do I track gurus, right? Let me show you this. It's called Guru Focus. Okay, and I was pretty surprised that they buy quite a lot of Baba. Okay, so there's a few indicators lah. Again, whether is it a good idea to just buy Baba like that? I'm not saying that we should do that. Let's see. Where is it? Okay, I think I was seeing like quite a number of. Oh, you know who is Jim Simons? Okay, Jim Simons is the one of my guy that I'm studying but it's discount for very, very long already. The Baba PB ratio is below 5 years average, but for very long already. He has been undervalued ever since some of my friends say, hey, buy Baba, oh, suddenly go all the way down. I don't want to tell you which friend it is lah. But not his fault, not his fault. But it's because of the China politics more than the business fundamentals. The business fundamentals has been going up, up and up. Okay, so this one, okay, take note, take note. I'm going to put down here, Baba, possible, you can do long-term call. I'm going to put all this here first. Later, we share the whole entire game plan. Can I close this first, because too many things, then the computer hang. Meta, I talk about buying the stock, TSM buying the stock. Now, one more, Netflix. Okay, so Netflix, right? In fact, right, they are, if I'm not wrong, let me check on Netflix, NLFX. Okay, Netflix is something I thought is quite interesting. So Netflix, let me show you a few things that interest me now. Because they announced earnings recently and their subscribers actually break new record. So Netflix, if I look at the 5 years compared to the current book value, it is at a fair value, okay? Not say super undervalued, should have bought it 3 years ago, which my children did, okay, for their Christmas, they keep buying Netflix because they see me watching Netflix quite a bit. Recently, I'm watching this Thailand show, hilarious, damn funny one. Later I tell you what. Okay, for those interested, you can go and watch. Okay. Now, so but I rather you all watch 21, those kind of mathematics shows that talk about using probability to win the market one. Okay. So Uber is Uber, I don't think there's a later we can take a look at Uber. So Netflix, you all can see valuation wise, fair value. Then price actually dropped. And let me share with you the last one. Okay. So let me share with you how I will play with Netflix. This is Netflix. The implied volatility is 20. Can you see? 20. So let me share with you. Netflix, in fact, is in the same category with Nike. So Nike also dropped quite a bit since the last earnings, pop, all the way down. And Nike, that time we also make money. So Nike, after we enter into it, okay, what happened was, this is Nike's implied volatility, 11%. What do y'all think? 11% of implied volatility percentile. Wow, this one is quite a good opportunity, correct? By the way, where do we get all this opportunity, right? Wait, later. Okay, I would like to give you all this link because you guys are here. Wait, okay, so this link, right? Let me give you guys this link. Please go and take it and then bookmark it. Okay, this link, can you see? It just shows you, these are some of the top stocks. Okay, the top stocks. I think it is, but there's 500 of them, but they don't show me all because I didn't pay for the account. But doesn't matter. What happens is these are the top stocks. Okay, what I do is I click on this thing called implied volatility percentile. Can you see? Then immediately they show me the cheap ones. Wow, Netflix, I see straight away. Wow, delicious. Tesla went up quite a bit, 44%, but I don't want to chase. I mean, I will look for those 30% and below. So it's very useful. It's a very useful screener for me, especially on those very big hot stocks. Okay. So Raya platform, this one is IV percentile. Okay, remember IV percentile. Okay, this is the one that we are looking at. Got it? So this is a very, very useful, I would say, resources that I've been using, and I like it a lot. Now, let's go to the strategy portion. Can according to total indicator, Baba now zero retailer, which is good, and bankers are high. I don't really understand. So is it you're saying that it's a good time to buy? Okay. I mean, it's interesting. Total indicator. Okay, maybe I'm not too sure. Your total indicator might be different, but I'm very, very interested to understand what it means. Okay, guys, let me share with you, right? So, Nike, Netflix, and Baba. These are the place that we can use the options. Nike, Netflix, and Baba. Okay, I'm just going to give some examples now. So you can see that for Nike, I mean, I used Nike before and we make money before, right? I'm going to use this as an example. You can go back and then test for Netflix and also Baba. I think the outcome will be pretty similar. So for Nike, the next earnings period is here. Now, you see Nike, the earnings period is here. So you give it some time. After you give it some time, people will feel that are boring, nothing else to look forward to until here. So very far away, right? Tada, guys, for those who are patient enough, this is where the money will comes in. Now, do you believe, right, that, okay, this is based on our own assessment. I believe that Nike, the next time they report earnings again, the price will move up or down. Agree? Okay. When I say agree, doesn't mean that it's confirmed correct. But if you think that, yeah, got chance, you can type A, A for agree. If you're unsure, you type question mark. So you must go for those, right? Every time they report earnings, boom, there's a gap one. I love this kind. Earnings, there's a gap one. Okay. So I think every time earnings got gap, right, my probability of the stock moving when there's earnings will be high. In fact, for most of the stocks, when they announce earnings, They don't just announce earnings. They will do forward forecasting. They will do like, oh, next year this is what's gonna happen. Oh wow, got this old guy wear the shoes, then suddenly the leg pain. You know, they will put all this message in. And people, especially newscaster and also those stock analysts, right? They like to take all this small information and make it like a big thing. Example, Mark Zuckerberg say, hey, we're going to spend money, and then let's make Meta the next AI. Then they say, hey, you don't bullshit me lah. That time you spend billions of dollars into metaverse. Where's your stupid metaverse? So they are angry with him. Then now you want to invest into AI. You don't bullshit me. Okay. So to me, right, I think it's a good opportunity. Reason being, right, they have shown that they are quite lousy in metaverse already. Agree? They spend billions in metaverse, also never make it. Okay, but so what? Their revenue still increase. Their profit still increase. They can afford to burn money. So even this AI, they never so-called turn it into a good investment. So what? They will still make money. But if they turn it into a good investment, it will be 10 times the money. So I think it's a very good bet for Meta, for Amazon also. But come back to this story of Nike. I believe the next earnings, there will be some spike, either up or down. So let's go back to one of my favorite strategy, especially when there's low implied volatility. And this strategy is core ratio back spread. Sean, got anything new or not? For me, if it's working, making me money, I will continue to use it. But at the same time, I like to learn new things also. But I like to test it out. Okay, guys, let me explain this. So core ratio back spread, a few things to take note of. So for Nike, the earnings will be in June, 27th of June. Okay, 27th of June, 3 months, June, July, August, September, correct? So what I'm going to do is this, I'm going to go for October one. Why do I go for October options? Because June, there will be one earnings report. Then September, there'll be another earnings report. So there'll be 2 earnings reports. So what can you understand? You can understand how many type 2. Okay. The reason why I want to have 2 earnings report, right? Then I got 2 chance of it swinging up or down a lot. So remember, June, there'll be 1. Okay, they never put the September one, but we know every 3 months there will be 1. So around September, there'll be 1. So October, I will hold my options until October. Now, if I hold my options until October, right? So core ratio back spread, simply put, right? What we do is we sell one option. We sell a 92.5 call. Why do we sell 92.5 call? Now the price is 94. If I sell 92.5 call, again, let me show you here. Based on current price, there's low volume, so you must go and check. It's $9.27. When I sell an option, I collect this $900. 9.27 times 100. Because every option is 100 shares, I collect $900. Understand all? I take this $900, I go and buy 2. I sell 1, collect money. I take the money, I buy 2. Buy 205 Nike call at about $400 each. So $900 I collect, I spend about 400 times 2, $800. Okay, understand? So in the end, I still got $100. So this whole trade, I enter to the trade immediately making a credit. Credit means I make money. I collect $147.50. How many of you love this? That when you enter something, wow, I thought I enter trade is pay money on. No, you collect money. If you love this, type C. C for credit. It's a credit trade. Okay, credit means they credit your account. Where got this kind of how liao? Okay, but of course the downside is this. Okay, let me show you this. The downside is you may lose money also. Where got good thing like where I lose money on? Let me show you this. Oops, sorry. Let me go through this again. Okay, let me explain to you all why I think this trade is a extremely high probability trade. Okay, high probability. Not say confirm make money. Okay, high probability trade, right, is this. You can see that the expiry date is on the 18th of October. So if let's say 18th of October, a few things can happen. The first thing that can happen is Nike spikes up and the price go way above 116. So this is called the risk graph. This is the price of the stock. Look at my arrow, price of the stock. I'm repeating this because some of you may be new. How many of you new to this? If you're new to this, type me. Okay, if you're already very seasoned already, then I go faster. Oh, some of you new. Okay, so this is what I call a risk graph. Allow me to just copy this link. Wait, you pause for a moment. Don't type first. This is a very, very good website. Super good website. Okay, in fact, it's so good, I paid money for this. But I think that you all don't need to pay, will have the same things. Probably you all cannot see a few things, but most of it is the same one. Okay, click on it and you all help me click on it and then tell me whether you all can see similar things or not. Help me click first. I want to make sure. Otherwise, if it's totally different, then I give you all this thing for what, right? Can see or not? Is it similar? If you all click, does it open? Yes or no? Want to make sure that I don't different. Same? Huh? Hey, same. Don't see the graph? Oh, okay, wait. If it's different, let me show you this. Maybe what you see is like that. Is it? Okay. Maybe some of you see this one. Maybe some of you see table. See table, right? Okay. Very good. Okay. So come back to my screen. So coming to my screen, you all see table, click on graph. Okay, can ready? And then next thing is you all adjust the range to full range. The range is how many percent from the current price now. Okay. You adjust the full range, you can see something like this. Can ready? Oh, okay. If still cannot tell me, if okay, how many type? Okay. Can okay, this is recorded. Later I send you all the recording. Then you can watch. Okay. Can this is a very interesting graph which I like a lot. And this is affects our probability. Chance of profit 62%, which is something take with a pinch of salt. Okay. But anyway, it helps a lot because it's based on beta, it's based on volatility and quite a number of things. Okay. So right now, right, what is happening is this. Let me show you this. This is at expiration, correct spelling. Okay. So a few things can happen. Number one, the price now is $94.64. Now, if the price goes up, right, above 116, you make money. Okay. Okay, so this is the price. Can you see? Right now it is $94. You see the dotted line here? $94. It can go down $90, it can go up to $100, it can go up to $130, $160. Okay, this is the price. Now, can you see the dotted line? Can you see the dotted line? You see my mouse, minus 1,000, minus 800. So the price, when it goes high, you start to make money. 1,000, 2,000, 3,000. Can see, okay? So as the price goes higher, you make more profit. This is called the risk graph. Make more profit, okay? Now, if the price goes lower, pump. The worst case scenario, okay, not say worst case. The price, no matter how low it goes, okay, you make $147.50. Can you see? Where does this money come from? It comes from the premium that you already collected. Understand so far? Now, if the price doesn't move, it stays near this range, then you lose money. So the worst case scenario, you can lose up to 1120. Okay, you can see here 1102. 1102. Around here, okay. It's around here. 1,000 plus, you lose 1,000 plus if the stock price is somewhere around here. It's at 105. Okay, you can see here 105. Understand so far? So if the stock price hit nicely 105, you lose $1,000. Can? Okay, now this is if, listen carefully, this is if you wait until expiration. But do we wait until expiration? Don't know. When do we close? We close after the earnings. So after the earnings on the 27th of June, we close already. So let me show you the impact. Let me show you a few things. So 27th of June, so we close maybe 28th of June, right? So I'm going to drag here, drag until 20. Okay, as I drag, can you all see the graph? You all see here? This is the losing zone. I'm very interested in losing zone because I'm a Singaporean. I scared to lose. Kiasu. Okay. No, I mean, actually, as investor, we want to make sure we lose as little money as possible. So, okay, when I pull, can you see? The money I lose is lesser and lesser already. Why? Because when you get out, so now you're holding options. When you sell away options, there's still time value. There's 67 days left. See, okay, now there's 80 days left. You lose even less money because you can get back the time value. Okay, if it's too confusing for you, just need to understand. You just need to understand that you have to go and attend the options call. You have to go and read out more about options. Okay, just kidding. Okay, so now I go back to the June. June 20, is it 27? 27 is the expiration. It's the earnings. 28 you can exit. You can exit. 28 you can exit. So if I exit on 28, you see, if I exit on 28, can you see that the worst case scenario, I lose $124? Is this a lot more? And if this one is if the price don't move, the price is now, if at the 20, okay, this you all see carefully. On the 28th of June, let me just confirm before I say very loud with confidence. Later I say so confident and say wrongly. Okay, so correct. The earnings is 27th of June. So if the 28th of June, the price don't move at all. Don't move at all. Because this is the dotted line which is now. Don't move at all. Okay, then I lose $122. But the chance is high or low? Is the chance of me, okay, is the chance of me losing money high or low? Now I'm talking about losing money. High chance to lose money or low chance to lose money? This is buying today if I enter. Okay, how do I lose money if the price don't move when they report earnings? Very, very low chance. Can you see? Nobody reply. I scared later I lose you already. You're okay. You're gonna rewatch. No. But this is not the only thing, guys. This is not the only thing. You know why this is not the only thing? Right now, what's the implied volatility? Okay, what right now? Right now, the implied volatility is around 20 over, okay, so plus minus lah, okay? The percentile is 11%. Now, the volatility is considered very, very low for Nike. Very low for Nike. So Nike, right, even if they don't move on that day, let me show you. Even if they don't move on that day, but because they announce earnings, and then because there's anticipation of earnings, okay, people are also don't know, hey, wow, earnings coming, I don't know whether the price will go up and down, right? The volatility will increase or decrease. Okay, will the volatility increase when earnings are coming? Now earnings very far away, so it's very low. So even you can see, let's say I set it before earnings, 26th of June. 26th of June. I set it before earnings because I don't know whether earnings what's going to happen. But 26th of June, there will be very high anticipation because tomorrow, the next day, there will be a report and they are very scared. Don't know whether Nike will go up or down. So what happens to the volatility? It will increase by a bit. And you know, if let's say the volatility just increased by a bit, right? There's zero chance of me losing money anymore. Can you all see that? Because I buy at low volatility and I wait until near earnings, my chance of losing money becomes zero. Okay, I mean, anything can happen lah, but so far is it logical or not? So can you see that this particular trade, right, is almost like a zero risk trade? Is it possible there's this kind of thing called zero risk trade? Don't have lah, because a lot of things can still happen. But the thing is this, is a very, very low risk trade. So a very low risk trade, worst case scenario, I only make $100 I only make like $90 then waste my time. But what is your capital? Zero. You don't even put any capital in because straight away you're making $147. Worst case scenario, you have to return them a bit. Okay, 147, you minus a bit of money. So this is a trade that I like a lot. And this is Nike. So in fact, right, I've been formulating all these trades and studying them. And I think based on theory, it works. Let's test it out. So I'm going to actually put some money in. Actually, I tested out a few already. It works. The best time to go in is after the earnings, everything cool down, people get bored of it. Then there's when people forget about this stock, never talk about it, then you enter into this trade and wait for the next earnings. Does it make sense or not? Okay. Yes, you should close. Okay, for me, I think you should close after earnings. Why? Okay, I see. So after earnings is 28 on the Friday, right? You should close after earnings because after earnings, then the price will already move. If it goes down, you make a bit. If it goes up, who knows it goes up, then you make a lot. What we are trying to aim for this particular trade, right, is to, who knows, Nike give a very good earnings, then you make a lot. But if they didn't, you also never lose money. That's the whole idea. Understand? Now, let me go back. Let me summarize because I took 1 hour. I'm getting more and more lost. Let me summarize this. So the summary is this. We can do this for Nike. We can do this for Netflix. We can also do this for Baba. Why? Because their IV percentile is pretty low. Okay, Baba is about 31. I think it's considerably low. It's considered low side. Netflix is 20. What do you think? You think the next earnings it won't move? I don't believe. You cannot tell me Netflix when they talk at time the price don't move on. I don't believe. Okay, Ken? So I do hope that this is something that is not just of entertainment, but for super investors. Tomorrow we'll go and see which one is the best one. Then we enter. Ken? Coinbase. Hey, let's try Coinbase. Let's try Coinbase. There's so many opportunities. How? But I don't think so. Let's see. You cannot Coinbase. Coinbase 83 percentile. Somehow after the halving, it doesn't move. Correct. Okay. That's the funny thing. So we have been in anticipation of the Bitcoin halving. Half already, also never have any difference. So somehow a lot of people confused and the anticipation is still there. So it doesn't matter. You see, we are sitting at the sideline and we are guessing. So we are watching. We watch. This particular trade highly in my favor. Then I enter. How many of you can take this? So most of the time we are waiting and watching, studying. When we see, wow, this one's solid one. If I enter, high chance of winning one, I put a bit of money. This is the way we play now. Super high chance of earning, super a lot of money. I put a bit of money times 2. So still a bit of money, position size. You don't go and show hand, show win. No such thing as show win. Okay? But over a different sample size, you will keep winning. And like Edward top, quite a number of this is I'm swinging a little bit into quantitative finance already, where we look at probability, we look at chance of winning. Okay, how many of you love this? Okay, Mumu can do it. Mumu definitely can. Okay, So Netflix is good for long-term holding. I also feel so. I also feel so. Okay. Bitcoin mining stock. Give me some ideas lah. Okay. Okay. Mumu, yeah, Mumu definitely can do. Sorry, I don't have Mumu account, but during weekends when I talk to my parents, my dad and my brother, I saw them use Mumu. We got tried the CBR before. Okay, so go for implied volatility. Okay, so in summary, long-term core or CBR, CBR. Okay, I'm going to put this inside the Telegram group. Okay, and then please continue to watch out. Each one position size very important. Two things. Two things. Okay, a bit also lah. Okay. Okay, number one, must have advantage. So we can see already S&P 500, all these, there's a lot of, all these stocks got advantage on, okay? The next thing is position size, okay? Position sizing. All right, so I do hope that you have enjoyed today. If you all do, remember to join us in our Telegram group to continue to discuss more, okay? Then I'll also show you all more for all these things. For super investors, live trading tomorrow, can? I'm going to put the, anyway, you're all from the Telegram group, so you all should be in the Telegram group already, right? All right. So I'll put this in there. We continue to discuss. I'll see you guys around, and I'll see you for super investors. I see you tomorrow for short live trade. See you. Bye bye.